What is up, everybody? This is Stock Market Education, and today we're going to be talking about DraftKings and whether or not it's a buy. Let's get into it. DraftKings is a digital sports betting platform that is comprised of daily sports fantasies, sports betting, and online casino games. 42 states are moving towards legalization, and the stock price has skyrocketed since then, going up 44% in the past month. Incredible growth. Everyone wants to write off DraftKings as a speculative stock that shouldn't be touched. However, Disney sees a different story, owning 6% of DraftKings, and Robert Kraft of the New England Patriots and Jerry Jones of the Dallas Cowboys are investors of the Boston startup company, which is why we're going to take a closer look at DraftKings today. I'm going to go over the good things about DraftKings and then the not so good things we see in DraftKings. And before we get into the video, make sure to click that like button and subscribe to the YouTube channel if you're new. Stock Market Education provides quick stock analysis videos to be able to shorten your time researching. With that being said, let's go ahead and get into it. DraftKings was publicly listed on the NASDAQ on April 23rd, and they trade under the ticker symbol DKNG. The old DraftKings generated $89 million of net revenue. And when they say old DraftKings, they're referring to the 2019 DraftKings and not the Q1 of 2020 DraftKings. So the old DraftKings had 60% year-over-year increase pre-COVID, and now we have a 30% year-over-year increase. So even with virtually no sports to bet on, DraftKings has still been able to grow 30% in revenue through other areas of the platform like eNASCAR, Counter-Strike, Rocket League, along with their casino game segments. Over here, it says that they have $450 million plus of cash on their balance sheet and no debt. In most situations, it's important to invest in companies that have more cash than debt on their balance sheet. Ability to manage monthly cash burns to $15 to $20 million with no major sports. In other words, DraftKings would have to go anywhere between 23 and 30 months without sports to bet on for them to run out of cash. So DraftKings is stable in terms of finances, and there will be capitalized to expand online sports betting and iGaming offerings as more states legalize. So DraftKings is the largest company in the market, which translates to a small but prominent economic moat. If we take a look at this chart on CAGR, CAGR, for those who don't know, is the compound annual growth rate, has steadily increased about 30% a year, give or take, when you include SB Tech, which is another sports betting and iGaming platform that DraftKings acquired. And when we compare DraftKings to other sports betting apps, specifically FanDuel, because that is their toughest competition, we can see that DraftKings has a slightly higher rating than FanDuel on the App Store, 4.9 compared to 4.8 for daily fantasy, and then again a slightly higher rating than FanDuel compared 4.8 to 4.7. On the right side is average minutes spent per session. We can see DraftKings is up 6.5 minutes compared to 5.1, which is 27% higher than FanDuel. And this is an important metric for advertisers because the more time people are spending on DraftKings, the more advertising is available, which in turn leads to more revenue. Now, it's important to note that DraftKings isn't profitable. Companies that aren't profitable should at least have a plan to reach profitability. And this graph shows that expected New Jersey contribution profit demonstrates speed to profitability. So the green bar represents gross gaming revenue, so all the cash that DraftKings gets from winning. NGR is net gaming revenue, which is pretty much a basic metric that represents profits for iGaming companies. Then you have gross profits, which is pretty self-explanatory. And then you have contribution profits, which is the most important metric to look at here because it takes all costs into account. So in 2020, they expect contribution profit to turn positive this year in the New Jersey market. And then 2021, they expect to go from $9 million contribution profit up to $49 million for a percentage increase of 444%. So there's a lot of growth potential for DraftKings. Taking a look at their management team, they are stacked with officers who have at least 10 years of experience, which is not something that people see with an IPO. The top 8 officers of the company have a combined 159 years plus of experience, which is pretty impressive. So now I've talked about the good things about DraftKings, let's take a look at some of the risk factors. The biggest risk factor is their valuation. So they're currently valued at $9.3, almost $9.4 billion, which is an absurd valuation, literally 10 times higher, if not more, than what it should be, which makes this more of a spec stock than anything else. And if we compare that to MGM's valuation, for say, of $8.4 billion, that would mean that DraftKings is $1 billion more valuable than MGM. And MGM generates over $10 billion worth of revenue every year and about $5 billion of EBITDA through dozens of integrated hotels, resorts, and casinos all over the world. And MGM is cheaper than DraftKings, so the market cap makes 0 sense at all, and it shows that DraftKings has been valued as an internet stock with a ton of potential like Shopify. Now, the most important thing to understand is the risk of evaluation. I still decided to buy a small position in DraftKings because once sports start to come back, we're going to see advertising for DraftKings like crazy on ESPN, which will turn into a catalyst for growth over the next year. And the other big catalyst is the slow but strong legalization of sports betting across the country. And over the next 5 years, DraftKings will be in almost every market in the US. However, there is more risk with DraftKings, which is why I'm not looking to add more to this position. But the shift towards online sports betting, along with Disney's 6% ownership in the company, along with Robert Kraft and Jerry Jones invested in DraftKings as well, we're going to see significant growth in this area. Thank you guys for watching the video. Make sure to click that like button and subscribe if you enjoyed the video, and have a great day. Bye.